we're going to be covering essentially what multifamily financing looks like. I'm going to do high level into this, and then we're going to talk about some deals like we promised and how you guys can make money, right? And the investment needed and all that good stuff. What is CMHC multifamily financing? So there's a couple of programs. So we're mostly going to be focused on the MLI Select program. This is where you can get up to 95% loan to cost or loan to value, depending if you're buying a completed property or if you're constructing it. We can dive into that as well as part of the Q&A. But the benefit of this type of financing is you can get up to 95% with a 50-year amortization as long as we score the right points. So we're going to dive into what those points look like. There's also a debt coverage ratio requirement. So they're looking for cash flow to make sure that the property is cash flow. And it's designed to create more affordable housing, okay, across Canada. So this is a Canada-wide program. Okay, so there's 3 major parts to the MLI Select if you want to get that 5%, loan to value, 5% into the deal, whether it's the construction cost or the down payment, plus closing costs and all those other fees. But there's an affordability component, an energy-friendly component, and an accessibility component. So with the affordable, ultimately, we can score up to 100 points just in the affordable, depending on the percentage of units that are deemed affordable. So that is, it depends on you if it's a new construction property, an existing property. So we'll dive into that. But if you don't have 100 points from that, we can tap into energy efficiency or accessibility, right? So making the building accessible or upgrading it, again, windows, doors, like all that good stuff. There's many different things and facets here. So here's pretty much how it works. So depending on how many points that you have for the MLI Select program, that determines your loan to value and your amortization. And again, here you can see LTC/LTV, so loan to cost or loan to value. So again, if we get 100 points, you can get up to 95% up to the 50-year amortization. What I really like is it's limited recourse as well. Full recourse loans, you're responsible for all of the risk. But limited recourse, it does take that from you. A bit of an option, which is super cool. Okay. The program does have net worth requirements as well. So we have to have typically 25% of the loan or a minimum of 100K, whatever's greater. And that's, again, your net worth. So if you're doing a $2 million project, let's say, you have to have at least 25% net worth, or again, the 100K minimum. So in this case, would need to have a net worth of 500,000. Then there's the liquidity requirements, right? So they want you to have 10% roughly approximate of the purchase price and the development costs to be liquid, because as you're building, right, you need money for the proper straws. So the thing with all these requirements is I don't want to scare anybody here. I mean, this is why we're setting up this call. It's hard for one individual person to meet all of these requirements. So a lot of times these projects get done as a team, right? So that's why we're going to show you different things here tonight. Okay. Then there's an experience component, right? I know so many people that are wealthy, have lots of money behind them, but they lack the experience to do these projects. So even though they're well qualified, they actually can't, right? They have to partner with somebody anyways to get it done. But ultimately, they are looking for experience for these projects. Okay, so MLI Select on resale properties is very, very hard to do. Everybody wants to get it at 5% down, but the building needs to get those 100 points to get max leverage and longest amortizations, right? And on an existing property, it's hard to get that. So what we'll often do is a bridge loan, something temporary, turn over the property, and then we'll switch into the MLI Select. But to get it on a purchase, it's very hard to do unless a builder built the property and it meets the whole program criteria, and then we're moving forward right away. So new properties, obviously, it's easier because we can build it so it meets the specs. And that's why Jen and Christine are here. They're both developers. They're going to discuss this with you. Now, there is a standard program as well to CMHC, which doesn't have any of those requirements, no points, none of that stuff, but it's only up to 85% loan to value, and you can get a 40-year amortization. So keep that in mind. Here's some comparisons between the rates. The programs. And these will all be available for the recording. And then it talks about the fees that CMHC charges, these fees get built into the loan. So that'll be there. So that's high level. So that's the boring stuff. That's the dry stuff. That's how the program works. Obviously, you want to tap into an expert that specializes in these programs. So that's why we're here. So we do this financing and then we develop as well. So I'm going to just put my link up here. So it's right down there. If you guys want to book a call, you can click that. Even if you're watching the replay after, you'll be able to click that. But that's there for you. So I suggest book a call if you have any financing questions. You'll also be able to book with Christine and Jen here shortly. We'll put that up in a second. But that's it. That's the financing. So let's turn over to Jen and Christine. They're mortgage agents, but they're also developers, right? And they're rocking it in this space. Lots of good stuff going on. And I'll let you guys take over.
Thanks, Scott. Hi, everyone. So we're going to do an overview. Scott's done the financing overview, and we're going to give you an overview of what we're kind of up to in terms of the investing and development space. We have been focused on Alberta, Canada's most promising province for real estate growth. We're going to chat a little bit about economics, population, landlord laws, sort of what's happening in Alberta and Edmonton and why we're focused there. And then we're going to share some opportunities with you. Let me just see what's happening with the slides here. There we go. So Scott, I know you didn't introduce yourself. Probably everyone on this call already knows you, but we're going to do a little introduction. So for anyone that doesn't know me, my name is Christine Traynor. As Scott said, I'm a mortgage agent on the LendCity team, and I'm also a commercial developer and investor. So I've been investing in the Edmonton market for about the last 5 years or so. My background in investing extends a lot longer than that. I bought my first property when I was 19, so way back in the day. And my background is I was a real estate appraiser for about 2 decades and owned and operated 3 real estate appraisal firms on Vancouver Island before exiting those businesses to focus on investing in development and commercial mortgages full time.
Everyone, my name is Jennifer Champion. I am also a mortgage agent with LendCity. I got into real estate investing in 2020. I started investing out in New Brunswick in value add opportunities. And then my husband and I were building duplexes, single family homes in and around the Victoria market when we lived there. And now I primarily focus on construction, U.S. and Alberta, as well as
Okay, so Alberta's economic momentum. So I'm sure anyone who's on this call has probably heard about or maybe you haven't, but there's been a big shift to investing, especially from other markets in Canada to Alberta. So a lot of investors who had maybe previously been focused on BC and Ontario have been turning to Alberta in the last, I'm going to say heavily in the last 3 or 4 years. Alberta is leading Canada in economic growth projections, not only just generally, but the real GDP growth is continuing to outperform other provinces. And a lot of people know Alberta's economy as oil and gas. That was really what it was known for, probably for, many decades. And in the last, 5 to 10 years, they have really been diversifying their economy. So a lot of tech companies coming in, logistics, manufacturing, film, renewables. There's many infrastructure projects happening in Alberta as well, significant ones. And it also has one of the strongest job markets in the country. Alberta also has higher incomes and lower taxes. So they benefit from no provincial sales tax, lower overall taxes than other provinces, and higher disposable income. So that allows for greater consumer spending and stronger housing demand. It's also attracting families and skilled workers, and people are looking at affordability. We've all heard that as BC and Ontario get more and more expensive. People are looking to a place where their dollar is going to go further, and that place is Alberta. The population growth is also unmatched. So for the migration between the provinces, they are leading the way, and they're also attracting a lot of international skilled workers, as well as young families who are drawn there for affordability. I think it is Edmonton, which is we're going to talk about in a sec, is the 6th most affordable city in Canada. Alberta also has higher paying jobs, a better quality of life, and they're pro-business, pro-growth, which is unlike Ontario and BC, where there's a lot more red tape. Landlord-friendly province. So anyone who has been investing previously in BC or Ontario or continues to, it's such a different, I guess I was going to say space in terms of Alberta and how they're landlord-friendly. So they have a more efficient eviction process, tenancy rules that are more fair, so in favor of landlord and tenants, as opposed to being in favor of tenants in BC and Ontario. And they don't have rent control. So you are able to increase your rent with no cap every year. So as long as, the rents are increasing with the market, you can have those conversations with your tenants, which as expenses potentially go up each year, you're able to increase your rents as well. So that in and of itself reduces the risk and increases your stability as a landlord, as well as protecting your capital. So Alberta's real estate advantage. The province offers the ideal mix for wealth building. So high rental demand, limited supply in key markets that we've identified, strong appreciation, high cash flow potential, and more affordable entry pricing. So we're going to get into some opportunities in a minute, but the entry price in Edmonton, which is a market that we're investing in and have been investing in, in some cases can be like a quarter of the price of different markets in BC and Ontario. So your investment dollars go a lot further. And in addition, the properties are cash flowing, which a lot of the times is not the case in BC and Ontario. So it has more rentals, which is what the market needs, more multifamily developments and purpose-built projects to support population expansion. So why new construction? We've been focused, as Scott said, and as we shared, we are developers. And one of a couple great things about new construction as investors is that everything is brand new. So you're not dealing with those heavy repairs and maintenance lines because everything is under warranty for the first portion of the building's life. There's also some incredible financing opportunities that are available specific to new construction, as Scott mentioned earlier in this call. So it makes them much more attainable and attractive to investors. And you're able to design your buildings instead of retrofitting, an older building, you're able to design them from the beginning to be focused on what that tenant or customer is actually looking for. And we're focused on attracting high quality A+ tenants, and we want our products to stand out in the marketplace. And we're also able to control the floor plans this way. So we're able to offer a superior product and bring a superior product to the market that is going to have our buildings leased up faster. So why partner with us? We live and breathe Alberta real estate. Our advantage comes from a strong boots on the ground team. We've got deep market knowledge. We've got construction, development, and financing expertise, a successful track record across multiple projects, and experience navigating municipal requirements and timelines. We have a proven formula for success, which includes strategic site selection, rigorous deal analysis, optimized layouts and design, best-in-class financing structures, transparent reporting, and end-to-end management. So we're going to share a couple opportunities that we have available to wrap up 2025 and go into 2026. And these are real deals that we have available. And they're also can be looked at as examples of things that we work on. So the first one that you're going to see here is called the Kensington. It is a 20-unit new construction project in a purpose-built community close to downtown. It is completing early in 2026. Purchase price on this one is just under 9.1 million. And it qualifies for the CMHC MLI Select 95% financing product that Scott shared earlier on the call. The points are coming from a combination of energy efficiency as well as affordability. So because it's been purpose-built for the financing product, we're maximizing everywhere we can there. And in order to access this type of an investment with the MLI Select financing, the minimum net worth requirement is 2.16 million, and minimum liquidity requirement is 865,000. So something like this, we always kind of keep our options flexible. We have these types of projects and this one available for either partnering with us, or we have these types of projects available for sale, where we would connect you on an opportunity like this. If you were someone who was looking to be more active, we would handle everything from, start to finish and put that together for you, including the financing. Or if you're someone who's looking to be more passive, that's where we partner with people. Some of our investors have all of the capital and liquidity and net worth needed to do something like this on their own. Other times we're able to put investors together on a specific project where it makes sense and it's aligned. As Scott mentioned, not everyone, can access this on their own. So we do have that as an option. So that's a 28 unit that's available. And then we also have a couple 8 units that we're working on right now. So new construction projects as well. They're completing throughout 2026. Purchase price on 8 units in Edmonton specifically is sort of anywhere from that $2.2 to $2.5 million range. Design all of our buildings and projects to fit, again, the CMHC MLI Select 95% loan to value or loan to cost. And again, maximizing points on energy efficiency and affordability. On something like this, a bit of a smaller project, the net worth requirement is sort of that $500,000 to $600,000 range. And the minimum liquidity requirement is sort of that 210 to 240 range. So again, on these types of projects, it's something that we could partner on, or it's something that we could put together as a full service package. Jen, do you have anything to add as we're kind of nearing kind of the end of our slides? Like, is there anything to add?
I think just, really understanding like what you're capable of doing on your own and doing that. And then if not, like it's a great opportunity to come into a project and partner with strong operators on.
Yeah. And one thing that I want to add that I think is really cool as well is that in Edmonton specifically, as long as the sizing's correct of the lot, you can obviously build 8 units, which is incredible. Where somewhere like Ontario, right, currently it's 3. So I think that really allows and magnifies the point where the area, right, they want to double in population, isn't it? Within 10 years, they want to double at least.
Yeah. They're focused on doubling the population.
Yeah, which is crazy, right? So if that's their focus and they're allowing 8 units, I mean, you can see it's like they're actually trying to do that, and it makes sense. So I think that's really cool too, that you can just do that and you don't need special permits. We do have some questions as well. So I'm going to see if I can put them on the screen here. So the first question here, I don't know if it's loading properly, but it's from Ziad. So Ziad's saying, how much rent per unit can be collected on the 95% MLI option?
Yeah, I was going to say, so it depends on the location. So each location will have a rent set by CMHC, and the rent needs to be at or below that amount. So it depends, it's location specific. So for example, in Edmonton, the rent set by CMHC is $16.65. So that's why this product, combining the financing with the new construction product, works really well in Edmonton, because a 1-bedroom unit or a 1-bedroom and den unit, and depending on sizes, 2-bedroom units are already under that rental amount. So you're not actually, as an investor, having to discount your rent. Whereas, for example, we've been working on a few projects that just comes to mind in Windsor, and I think it's $885 is the affordable rent. So you would have to have your units for affordability $885 or lower, but the rent might be, off the top of my head, say it's $1,600. So you're really having to give up, $800 per month per unit, and then your building doesn't cash flow and the numbers don't make sense. So it's really that's why we've been focused on Edmonton, because it really is a market where you can actually combine the new construction with the financing product for it to make sense.
I love that. Jamie says in the chat, makes me want to move back to Alberta. Yeah, I mean, it's they got lots of good stuff going on. So this next question's from Mo, and it says, thanks for presenting. In the 8-unit building, how many bedrooms do we have per unit?
So for the 8 units, we usually set it up as like 4 mains and then 4 basement suites. So in our main unit, we have 3 bedrooms, 2 baths. And then in the lower bedroom suites, we'll either have 1 bedroom or 2 bedroom suites.
Yeah, it's pretty cool. I've seen some pictures of the units being done, and I know you guys do a good job. And I know one of the things too that I've seen and heard from previous presentations is that you work with top people that know the best layouts and just different things like that, where a lot of people don't think of that, right? So they jump in on this, but if they're using the wrong layout for the neighborhood or wrong finishings, right, they're going to have higher vacancies, right? So we don't want that.
Yeah, I was going to say, Scott, you do end up with higher vacancies. We've seen it with clients that we've worked with on the financing side in Edmonton who, have gone down the path of buying an 8-unit building off of MLS, which can work, but we've seen where they've had challenges with leasing up their building, with tenant turnover, and with actually getting the rents that were projected in the proformas. Because we built a portfolio in Edmonton and we work with a highly vetted team on all facets of it, we know what the rents are. We're not just guessing what, these units in an 8-unit or the 28-unit are going to go for, because we have other buildings in the same locations that we're leasing up on an ongoing basis. So we're able to use real data as opposed to a projection. So yeah, that is an advantage for sure.
Which is awesome. But yeah, no, great question, Mo. I'm not sure if there are any other questions. I don't see any in the chat right now, but feel free to leave them if you do have questions. So what I'm going to do too is I'm just going to put up the booking link here. I see another question come through, but I'm just putting that up. You can speak to any one of us. It's all good. Like we all connect and work together as a team. But I've got Jen and Christine's booking link there for you guys. So most thing, let me see if I can highlight the question. For liquidity, do you accept equity?
Yeah. So for CMHC, their liquidity requirements are coming from actual like cash in your bank account or say TFSA, stocks, unused line of credit. Equity would be contributing towards your net worth and would not be looked at for liquidity. That's a CMHC standard.
Yeah. But we've had people refinance properties as well. So if it is tied in your equity, we'll do a refinance first, get you cash in the bank, and then we show that for liquidity. So that's an option, Mo. Ziad here says, have you guys identified empty parcels of land in Edmonton that would be ideal for these types of developments? I'll let you guys cover, but I know the answer is a firm yes.
Yes, we have. So the examples that we shared are actual opportunities that we have available, right? That we're actively working on and properties that we have access to and have either acquired and are putting together or, have under contract. We have access to an incredible team in Edmonton. Jen actually lives in Edmonton, so she's boots on the ground there. But we have an incredible team there that, if we're looking for opportunities, we essentially can contact them and say, hey, this is what we're looking for. Here's our parameters. These are the neighborhoods. And we're able to get those pulled together, literally within a week or two. And we've got a really good source on lots as well from multiple people that we work with. And, the building teams all lined up as well. So everything from, the acquisition of land through to full lease up. And then, of course, the ongoing management is all covered.
So it's super cool. There's even like way more projects than this that are ready to go. Like it's with the network that's there. So there's all kinds of stuff. So Mo's question says, do you have a team in Ontario for the same project? Yes, I live in Ontario, Mo, myself. So that's the cool thing with our team here is we're really Canada-wide. We can help you regardless. The thing that Christine stated, however, is that in Ontario, we do have to take a reduction in rents for the affordable, where in Alberta, you don't. So just keep that in mind, right? That you will have to go by the rents. Now, we have a guide that, depending on the location, the rents are different, right? They use different affordable rents per location. So you could be in an area where it's not a huge, massive reduction. Windsor is a massive reduction in income. It's like half, right? Like it's pretty much half of market rents. So keep that in mind. But yes, Mo, we covered everywhere. We could do this everywhere. So Mo's in Ottawa. Yeah, we have tons of investors, people we know and work with, part of our network. They're in Ottawa as we speak. So yeah, that's not a problem. Jamie is saying, how does Calgary compare to Edmonton in terms of market opportunity?
Yeah, I think Calgary is like poised to come back. I think they went through a very large growth and rents got a little out of control. And then they were not achieving those rents, therefore affecting building values. So I think right now Calgary is just in a very cool market. But I do think that it will continue to come back strong. Probably 20.
That's awesome. Great question, Jamie. Of course, guys, please keep your questions coming. I have a random political question just for fun while we're waiting here. Is Alberta going to separate from Canada? What do you guys think? No?
Oh.
Okay, good. We don't want that.
No, we don't. We don't want that. We want to be able to keep investing in Alberta as Canadians.
Okay, Ziad says, last question. Any concern over saturation of these types of projects in Edmonton?
This is a great question that we get a lot. And that's why we really put strong emphasis on location of your project as well as the layout. I recently went and toured some projects done by different builders, and the 2-bedroom suite were more like 1 bedroom and like a very small den or shoebox. Like when a renter opts for a larger, very well laid out, great location, or not, I think they're going to go right. I think as more of these things come online, that pre-planning process and having that strong team in place is huge, so that your projects are the ones that are being rented and not sitting.
Yeah, I was going to just add to that too, Jen, exactly like what you said is location and floor plan. And as well, I think there's a huge component that gets underlooked is the operations, right? And so I think a lot of people, especially as out-of-town investors, think no big deal. I'm going to go buy a finished 8-unit building and hand it over to a property manager and it's all going to be rosy. And, because we are also investors, developers, and work with investors and developers on the financing side, as well as strategically in consultation with them as well, what we see happen is people underestimate, the strength of the operations, right? And so because we have a team there that we've built up over the last 5 years, the property management component is really important, down to the marketing of getting your units rented and your buildings full, and how are we going to keep buildings full if there was to be more product on the market. Those are all things that we have our finger on the pulse with, that I think a lot of people miss. And so where we're getting our buildings leased up, either pre-completion or within 2 weeks after taking possession, sometimes we'll see people that are taking 3 to 4 months to fill their units, and that could be a combination of not having strong operations, but also the floor plan, right? And if tenants do end up having the option to select, multiple places, they're going to pick, we want our product to be the one that they're going to pick. So we have heard concerns over saturation, but I think, we haven't experienced that with our projects because we're being strategic.
Yeah. And I will say this too, from a financing standpoint, and please take it with a grain of salt, because I'm only one, mortgage lender out of probably hundreds of thousands in Canada, but I am getting a lot of requests for people that want to move to Alberta, right? They're inquiring on potential mortgage penalties, or if their loan is portable, right? So I would say I'm getting that more now than probably I ever have. Some of that's political, right? But that is happening. And then you've got the mandate again, with Edmonton specifically wanting to double over the next 10 years. Just, I don't know. But I do think over time, like, I think we have lots of time. But I think, eventually, right, there's going to be another market. Maybe it's not Edmonton. Maybe it's a new place in Alberta. So we have to see. But right now, Edmonton is the hotspot. It's got a low cost of living. It's really cool. Jamie's saying it's never all going to be rosy. Yeah, absolutely. But you guys have been great. Is there any other questions that anybody has? If not, that's okay. You can send them in. You can book a call with Jen or Christine. We'll be able to answer them. So if you book a call, we can get you guys the full performance, and we can send you the full package on each property. So if you notice, we didn't do that here. We just presented what's around, but we can get you the full package. It says he's all set. Thank you. Yep, you're welcome, Ziad. Thanks for coming. Appreciate everybody here for showing up. The recording will be here if you guys need it. But otherwise, if there's no questions, then we're going to cut. So we'll give maybe 30 more seconds just to see, and then we'll go from there. But no, it's awesome. And also too, guys, like, if you want, still reach out and we can send you photos of some of the projects, right? And what's going on, so you can see more in depth. Stunny says, how does the return on the investment look like? I think it depends. I think let's set up a call, right? Set up a call. We can go over it, find out your investment horizon, all that good stuff, the projects you like. And Jamie says, appreciate it. Thank you. Yeah, you're welcome. Nicholas says, thank you. We'll book a call with Christine. Yes. Hi, Nicholas. It's been a while. I hope you're doing well. But yeah, definitely book a call. We can show you guys the pictures, show you the returns and stuff. This is going to be public, so we can't really post it here. But okay. Well, I think that's it. So thank you, Jen. Thank you, Christine. I really appreciate you guys for spending your valuable time and coming here and showing us what's going on and what's out there, and for everybody else for joining and listening. And we look forward to working with you and going from there. So thank you, guys.
Thanks, Scott. Thanks, everyone.
No problem. Take care.